Hi, Tom Lydon here in Chicago at the Morningstar Conference. I'm here with Alex Piré, who's head of client portfolio management at Seeyond. Great seeing you, Alex.
Thanks for having me, Tom.
Another great conference. A lot of folks are filled with advisors here. Advisors have been doing a lot of hand-holding the last 6 months as market's gone way down and way back up. Let's talk a little bit about behavioral finance. What are some of the main things that you're seeing there?
I think that's a great point. What we're seeing, what we're experiencing as investors is the potential for volatility to strike at any time. Now, what we've identified at Seeyond, and we deal with human behavioral issues on a day-to-day basis, that's how we build a lot of the strategies that we run, is that there's really two main fears that sort of are exhibited, if you will, by investors. One is the fear of missing out, and that's usually on the upside. All right, you're mowing your lawn, your neighbor is saying, I've got this great return on my portfolio, and you start thinking, oh, maybe I need to change my own allocation. The second one, and that's a really, probably a sharper one or a tougher one to harness, is the fear of loss. Right, that's that fear when the market is going down that there's not going to be a bottom. And I think we're really starting to experience this later in the cycle, which is sort of where we are today.
Yeah, you're right. We are later in the cycle, but who's to say this couldn't go on for a couple more years? So the advice is, don't get caught up in the day-to-day to some degree. Make sure you're diversified. And most importantly, as you folks look at long-term portfolios, what are the things that you really focus in on?
I think that's a great point. So, the advice that I would give is complacency is probably dead at this point, right? We need to make sure that we're building strategic asset allocations that are harnessing the power of both returns so that you can continue to potentially get some sort of return out of your allocation if the market continues, which we expect it to continue to run for a little bit of time, but also have an eye on the risk. And that's really being smart about your allocation, understanding what you're owning, diversifying your portfolio, and ensuring that you're able to weather some of those storms. Now, ultimately, most investors are long-term investors, and so building that strategic allocation that can get you through the storms, the shorter-term storms, but that can yield a long-term return that will get you to your goals is essential.
Yeah, and I think we've talked a little bit before. Today's major market indices like the S&P 500 have changed a lot in the last 10 years because certain aspects of growth momentum have become a bigger part of that index.
Of course.
So when you look at more intelligent beta strategies, which I know that you folks offer, it's important to look under the hood and, as you point out, understand risk.
I think that's very important. At Seeyond, we've built strategies that really look at minimizing risk. So we have MVIN as our ETF, MVIN is an international equity portfolio, it's about 100 names, and those securities that we invest in have a lower sensitivity to the market.
Yeah.
Right? That really means that when the market is taking a hit, we're not going to have as much of an extreme reaction in terms of return as you would expect from other either passive or active managers.
Yeah.
That helps investors stay invested over the long term, which studies have shown is really the essential thing that you can do as an investor to be able to achieve your goals.
Absolutely. Alex, as always, great seeing you.
Thank you, Tom. I appreciate it.
Thank you.